AMC stock up another 5.5% at the time of recording this video. This is coming after we rallied 15% yesterday. So what is going on? What do you guys need to know? Well, Adam Aron's tweet yesterday is adding a lot of enthusiasm for AMC shareholders, as well as bringing in some new buyers here today, and we're going to go over exactly why that is. We also had very strong labor market data. We added about 367,000 additional jobs, and that is even making the market start to slightly price in a possible 1% rate hike from the Federal Reserve. So we're going to get into all of this information, why this is going to mean we are going to see a lot more downside here in the near-term future, and overall some things you guys should know regarding that. So let's dive into this video, guys. AMC stock is hitting a new high as we are recording this video. That is a sign that you should tickle, tap, or touch, smash the like button, tickle, tap, touch, or smash the like button. Thank you guys for doing that, and subscribe to the channel if you guys have not already. If you want to come trade with me live in real time, link down below in the description of this video as well. So AMC stock is doing its thing. It's ripping. It's up 5.63% right now, currently at $15.31 per share. Now, why this is happening, if you did not see my last video, Adam Aron put out a tweet that said, I keep getting asked, when pounce? Know this. 1, I always keep my word. 2, I've said publicly a pounce would not happen before second quarter 2022 earnings are announced. 3, press release issued today that Q2 earnings to be announced on Thursday, August 4th. Read between those lines. Now, what Adam Aron means by when pounce comes from the last earnings call. So, quote, your ire and anger directed at short sellers is evident, Aron said on May 9th. I hear your suggestions that we should call for more market regulation by governments, or that we should take more company action by issuing a cash, gift card, or NFT dividend. Aron said that listeners shouldn't interpret silence as inaction. Quote, we are constantly exploring the smartest courses of action, and I promise you that we will pounce, but only when the timing is right. Now, I personally think the timing is right for a major action from the company, whether that is a dividend or possibly some form of NFT dividend, gift card, or just a regular dividend, at the same time as possibly having to announce some really good earnings. And also, I do personally think AMC is likely acquiring stakes in companies, and I think we could get a slew of good news. Mix that with some kind of dividend or something to reward shareholders, and I think you could see a very explosive event for AMC stock. And why I think that is really the timing. August 4th, the markets are probably going to be so far up shit's creek by then. It's going to be a really bad time for hedge funds if a stock that you have short positions on does start to make some pretty explosive moves. You could put a lot of pressure on hedge funds in a very short amount of time. And I think when pounce, why would you hype that up if there's nothing along the lines of what you said during the earnings call? Because that's what Adam Aron said, a cash, gift card, or NFT dividend. And if AMC does have good profits, they would be able to do something like that. A lot of people refer back to the bonds that AMC has out, or the notes, whatever you want to call them, that Adam Aron has said that they can't issue, any kind of NFT dividend or dividend in general, but that's because they are not profitable. If they are profitable and they have extra profits, then they will be able to do what they want with those profits, and it is very possible that we do get some form of dividend in one way or the other. So I think that's why you're seeing a lot of bullishness and enthusiasm over the last 2 days for AMC stock. Rallying 20% is definitely something to be happy about. Let's just call it that. I think it could be the start of something really, really big. Now, what actually came out today that has the markets pricing in a possibility of a 1% rate hike is the jobs market. So here where the jobs are for June of 2022 in one chart. This is very nifty and broke down very well. It says healthcare and social assistance saw the biggest jump, followed by professional and business services. The leisure and hospitality sector saw another strong month, adding more than 60,000 jobs. So the only category that lost jobs was actually government jobs, and that might be because tax season or whatever else. But this is really saying that, hey, the Fed has all the room here to raise as much as they want, right? That's, you got to remember, the Fed's dual mandates. It's not to keep the economy out of a recession, which kind of, but it's for maximum employment, which we're like so far past what we thought maximum employment is. We could afford to give some back before it would be a real problem for the Fed. Maximum employment, that's number one. And then number two is price stability. And inflation at almost 9%, not price stability. And we are actually expecting to see CPI go up in a pretty big way in this next upcoming week. So we'll go ahead and pull up next week, and CPI does come out on Wednesday. So we get the inflation rate year over year for June. We are expecting as high as 8.8% inflation year over year. That is going to be a new all-time high from the all-time high we set last month at 8.6%. So we have seen commodity prices roll over. We've seen a couple things work in our favor, but now you're starting to see real estate inflation, right? The rent inflation is actually starting to be shown, I should say, on the CPI report, and that is definitely driving CPI up, or at least driving the estimates up. And if we hit a new all-time high for inflation, possibly some people are even talking about 9% inflation, you could see something along the lines of what you've seen last time around, right? Pull up the SPY on the daily. We got our CPI report right in here, and the markets did subsequently fall about 12%. So I think that's going to be the big catalyst for next week. That's what the markets are going to start paying attention to. But if we make our way over here to the Fed rate monitor tool, wow. So we're sitting at a 96% chance of getting a 75 basis point rate hike. But just as of today, there's a 4% chance of getting a 1% rate hike. So if we get more good data that comes out, if inflation does come in, 9% or possibly higher, and we keep getting strong economic data, while the markets could very quickly start to price in a 1% rate hike. And if the markets price it in, the Fed is going to do that. There's no other way to put it. If it's priced in, Fed will do it. Right now, it's only looking like 75 basis points, but the fact that we now have 4% of market participants expecting a 1% rate hike, and we do get the next Fed rate hike by June 27th, there's quite a bit of time for the markets to price in a 1% rate hike. So that is not very good. And why that is because if we get a 1% rate hike, the federal funds rate will be in between 2.50 to 2.75%. Now, the bond market, think about it like this. Bond yields currently sitting, let's go ahead and look. They move around every single day. Currently sitting at about 3.10%. Well, if the federal funds rate all of a sudden goes to 2.5%, right? Or 2.5 to 2.75%. Well, why do bond yields have to be higher than the federal funds rate? Well, let me tell you, because the reverse repo market is set at where the federal funds rate is at. So the federal funds rate is at 1.50% to 1.75%. So that's what banks get overnight to lend the Fed their money. Well, the banks are not going to buy treasury bonds that are paying the same as what you could get overnight with the Fed. So that's why bonds have to have a higher yield. And if the Fed raises rates to, close to 3%, 2.5%, well, bond yields are going to have to at least go to 3.5%, if not 3.75%, just to keep the market in line. If the bond market did not do that, well, hey, we got a major problem on our hands, and the Fed would probably U-turn at that point, which is not going to happen. So bond yields have to go up. 10-year treasury has to go up, making interest rates go up, and that will have to push the markets down in a pretty substantial way once that does happen, because the bond market has been falling, bond yields have been falling because people are fearful about a recession. Well, if the Fed continues to raise, there's no choice but to see the bond yields continue to go higher. And that is what has happened over the last couple of days. After the last couple of weeks, we have seen the yields come down sharply in the bond market. So pay attention to this very close. Pay attention to the Fed rate monitor tool. It's free 99, investing.com, Fed rate monitor tool. Look that up. And the more we start to price in a 1% rate hike, the uglier the markets will get later throughout the month of July and ultimately throughout the month of August, when I do think you could get a flush out event. You could see a bottom for the markets, and also could be a very good time for AMC to announce some form of a catalyst, and that could be the win pounce and what that tweet ultimately means. So there is all that information. Cost to borrow rates are doing some weird things today. Cost to borrow minimum at 10.79%. Cost to borrow average at 13.24%. Cost to borrow max at 14.65%. So cost to borrow minimum has went up quite a lot. Cost to borrow max has come down just a little bit. So keep that in mind. 10% cost to borrow rate is still, very high. It's like uncomfortably high if you don't get a big move. So I think that is really good, and I think the bonds going up and the Fed raising rates is having a big role to play in cost to borrow rates across the markets going up in a pretty decent way. So there's that. Short interest is sitting at 17.77%. Let me just tell you right now, the estimated short interest is wrong. We have to wait until the settlement date comes out, which will be here in the near term future. Over the next week or so, we'll get new short interest data. Last time it came out was 21.92%. We have not seen any indication of shorts actually covering. I do think there has been a lot of shares that have been returned that were out on loan as the markets have been rallying over the last couple of days, defying all odds. I think it is because you are seeing portfolio rebalancing because we are now in Q3, and I think that's what's really pushing stocks up. Hedge funds reevaluating their portfolios, but I don't necessarily think this is a rally that is going to last a while. So there you guys have that. Free flow out on loan 27.13%, shares out on loan 139.85 million, days to cover at 3.42, cost to borrow 14.24, 100% share utilization. So that looks good. The option activity is 85% positive for the day. 7 orders totaling $268.01 thousand. Pretty much all of this is call activity coming through. A lot of it for July 15th expiration. There's one call for July 22nd. You do have an August 12th $20 call as well. So a lot of very bullish option activity, specifically around July 15th. That's where you have the most dollars actually coming in. If we do go ahead and take a look at July 15th, for the total amount of options on this expiration, 73% of the open interest is calls, 27% of the open interest is put. So I think that is important, and we will highlight that again in the video later on today because that is something we really do need to talk about. And I think we're in for a bit of a gamma squeeze coming here in the near term future. So yeah, Max Payne, last thing that we do need to look at, $15 per share for July 15th for this Friday for today. You're sitting at about $12.50 per share. We're up $2.50 from there, sitting at about $15 per share. So it's not always a science, but it can give you an indication. Potentially, are we going to be bullish? Are we going to be bearish? But what I will tell you is moving around AMC stock is a small gamma squeeze over the last 2 days. 20% is nothing to sneeze at, and it's definitely due to the options. You now see about 56,000 calls that are currently in the money for today, and you are seeing about 73,000 calls that are currently in the money for July 15th. If these July 15th options continue to run into the money throughout the rest of today and especially next week, you will see a lot of shares that have to be bought by the market makers as those break evens are very low because the contract prices are also very low. Now you are still seeing about 462,000 calls that are currently out of the money, so there's a lot of dry powder on the sidelines, and as we have broken out above $15 per share, a lot of puts have went out of the money, so a lot of market maker de-hedging, aka buying shares on the open market, is happening on the put side as well. So the options are definitely what is driving the price action over the past 2 days. In my personal opinion, Adam Aron's tweet definitely did play a role to start that momentum at the very least. So that is going to be all for this video. Thank you guys for watching. If you found value out of it, hit that like button and subscribe to the channel. Thank you guys for tuning in. Get your free stocks down below in the description, as well as if you guys want to come trade with me live in real time, also link down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.